Good morning, this is the latest market news. I am Uliana. Asian shares traded mildly weaker on Wednesday morning, with Chinese property developers facing headwinds and other markets soft ahead of the conclusion of Federal Reserve's policy meeting. The US Central Bank is to announce its decision on interest rates and monetary policy, followed by a press conference with Janet Yellen, her first as a head of the Monetary Authority. The Shanghai Composite lost 0.94% and Hong Kong's Hang Seng Index fell 0.16%. Japan's Nikkei fell 0.3%, giving up its earlier gains as the yen strengthened against the dollar. Australia's ASX 200 was flat and South Korea's Kospi was up less than 0.1%. The big news overnight came out of Russia as President Vladimir Putin announced that Russia will not be seeking a partition of Ukraine. This indicates they would not be seeking territory further than Crimea. The news comes a day after the president acknowledged results from a referendum vote in Crimea. In US data overnight, the market saw building approvals reaching a 4-month high after a poor showing in January. Figures indicated an annual rate of inflation showing whilst US consumer prices increased in line with expected by 0.1%. Overall, the euro today opens again at similar levels to Tuesday as the market will firmly turn its attention to the week's main event with the US Federal Reserve meeting. Tapering is expected to continue by another $10 billion when the meeting is held early Thursday morning. Central banks will drive much of their macro news today, starting with the release of minutes for the Bank of England's recent policy meeting. Later, Janet Yellen will preside at her first press conference on monetary matters as a chairman. This follows the publication of a Federal Open Market Committee statement and a new set of economic projections. We'll also see an update on UK jobs data in today's monthly labour market report. UK labour market report 9:30 GMT. The consensus forecast is unemployment unchanged at 7.2%. The claimant count, a key leading indicator, is expected to post another healthy decline of 25,000. There's a slightly slower drop versus the previous decrease of 27,600, but today's projected fall is still strong enough to support the outlook for a robust recovery in Britain. It was the latest market news provided by ICA FX. Goodbye.